Welcome to today's webinar, Cloud ERP Strategies to Drive Global Growth. We have an exciting event presentation for you today. Joining me today is Paul Hammerman, Vice President and Principal Analyst from Forrester Research, and also Adam Famularo, who's a GM and SVP at CA Technologies. Before I get going, I would like to make an introduction to our speakers. Paul is a Vice President and Principal Analyst for Enterprise Apps at Forrester Research. At Forrester, Paul focuses on human resources management and financial applications, as well as trends and directions in overall market for enterprise applications. Paul came to Forrester through in 2003. He has been an industry analyst for 12 years and has 30 years of overall experience in research and advisory services. Prior to joining Forrester, Paul held consulting management positions at Coopers and Lybrand, Ernst & Young, and Hunter Group. Paul earned a BA in economics from Connecticut College and MBA from Duke University. He's a certified public accountant and certified management accountant. Welcome, Paul. I also have Adam Famularo, who's the SVP and General Manager at CA. Adam is the General Manager and SVP of Enterprise and Cloud Solutions at CA Technologies, leading the team that brings to market the company's new and innovative cloud computing solutions. In his role, he is responsible for establishing and driving their overall vision and business strategy, including product management and marketing, and for managing the P&L for the business. Adam has held various leadership positions since joining CA Technologies in 1998. Most recently, Adam was a Senior Vice President and General Manager for the Recovery Management and Data Modeling business units, where he led the turnaround of the Arc Server and ERP product lines. Adam completed a General Management program at Harvard Business School, earned a Master's of Business Administration from Dowling College, and a Bachelor's degree in Business Economics from State University of New York. Welcome, Adam. Before we get going, I would like to introduce NetSuite to you, for those of you who are not familiar with NetSuite. NetSuite was founded in 1998 and went public in 2007. We generated more than $300 million in revenue in 2012. With over 2,200 employees worldwide, NetSuite provides a cloud-based financials ERP software suite. In addition to financials and ERP, NetSuite offers a broad suite of applications, including accounting, CRM, professional services automation, and e-commerce that enables companies to manage most of their core business operations in single integrated suite. We have over 16,000 organizations using NetSuite worldwide. As you can see, some of the marquee customers have standardized their platform on NetSuite. Not only small to medium-sized companies are using NetSuite, but Fortune 100 companies join NetSuite as well. Some of the marquee names are Procter & Gamble, Cisco, Oracle, Cardinal Health, Walgreens, MetLife. They have realized the benefit of NetSuite solution, and they have standardized their ERP and financials at either a subsidiary level or in the international offices using NetSuite. Not only Fortune 100 runs NetSuite, but today's innovators such as Box, Roku, GoPro, Jawbone, they also have realized the benefit and start using NetSuite to run their business. For these companies, they don't even look at on-premise ERP. The first thing that they look at is cloud, because they know that's the future. They cannot afford to have on-premise ERP and maintain the expensive infrastructure they need to run their business. So the first choice, they go to cloud ERP, and for them, they have standardized on NetSuite. So the question is, why the shift? Why the largest companies in the world to the most innovative companies of today are moving to cloud? That's the question. Technology decision makers, especially the CFOs and CIOs, are recognizing the benefit of cloud computing, including potential lower computing costs and increased agility. With the cloud market expected to grow from $40 billion in 2011 to $241 billion in 2020, businesses will likely evaluate what to move to cloud, when to move it, and how to transition from an on-premise computing environment to cloud environment. It is inevitable that companies will have to embrace cloud. And this is the reality. According to New York Times article, more human beings today have access to cell phone than United Nations says have access to a clean toilet. This is the reality. The shift is on. The way we communicate, the way we consume information, the sources that we rely upon, or the way we work and collaborate is changing. The new technology is shaping the way we work and the way we talk to each other. Not only that, but the businesses that are doing businesses, how they do business is also changing. It is inevitable that we leverage technologies that are suitable and cost-effective for today's business needs. Many organizations are moving to cloud because of its agility to connect an ever-increasing distributed workforce across the world. The cloud enables employees to have access to real-time data anytime from anywhere, increasing collaboration and productivity. Cloud also levels the playing field. The power of business software is no longer reserved for large enterprises that can afford to have huge IT departments. It is no longer the case that you have to be a multi-million-dollar in revenue before you can be considered a global company. Small to medium-sized companies are global companies. They have manufacturing in China, warehouses in Hong Kong and India, Europe and Americas, and customers across the globe. At the same time, large companies no longer have resources they once had. We are all expected to do more with less. This is the business reality. So we have to embrace new technologies such as cloud to make us more efficient. According to a CIO of a technology company, cloud computing can make expenses more predictable. This is the need for all the businesses today. We need to know how much we are going to spend. But comparing cloud to on-premise technology, it is helpful to look at it from a total cost of ownership perspective. It gives you a full picture. It gives you a full picture of how much you are going to spend. The days of not knowing that are long gone. Companies are looking for ways to be more efficient. They are embracing technology such as cloud to make them more efficient. The days of purchasing software licenses upfront just in case you may need them later on are long gone. Cloud enables pay-as-you-go model. You only need to buy what you need today, and if you expand, if you grow, you can buy licenses or you can add users at a later date. You don't need to purchase those licenses up front. No need to invest in software licenses or hardware up front. Cloud brings agility of small businesses to large businesses. And if you're a global company, I guess the challenges are even greater. According to a leading analyst firm, more than $1 trillion have been spent on ERP so far. The question is that, has the investment paid off? It is feasible for companies to replicate on-premise environments globally. Whenever there is a rapid growth and there is a person doing a task versus a system doing a task, it can result in inefficiency and lack of confidence in the things that is being done, especially as your company goes farther along and grows. Large organizations find the problem formidable with many moving parts and in discrepancies that create a leave-it-alone mentality. But can you really afford to leave this alone? If you have an environment like this is an example. If you're a global company where you have multiple systems all over the place, how do you maintain this? How do you grow? How can you afford to replicate the environment that you have at a headquarters at a smaller subsidiary? The problem is there, and it's very expensive to do that. So the question is single global instance, is it possible? Well, most medium-sized to large organizations already have ERP financial systems in place, but they are struggling to figure out how to support their businesses as they move forward and with flexible business models that can support their growth. It is not surprising that organizations want to get on one system that can handle as many processes globally. They want one system to record the sales lead and very beginning and then track prospect and then generate estimate and then book orders. build those orders, and track the shipping and inventory, and record the revenue and collect the cash without worrying about managing handoffs between the system. This is an ideal situation. All of us want to do that. It makes it a lot more easier. But is it realistic? But it's proven it's not realistic to have single instance ERP financials worldwide. The concept of single ERP suite that meets all of your enterprise's needs, particularly in large, complex, and diverse organizations, is no longer tenable. How can you do same implementation for $10 billion company for a subsidiary in Brazil, for example? How can you afford that? It's no longer feasible. The subsidiary wants to get up and running in 3 months, not in 36 months. Variety of business pressures are forcing people to accept that single monolithic implementation of ERP probably isn't going to work. So what are the options? The options are looking at two-tier platform. Most organizations are overwhelmed with tactical issues such as reducing licensing costs, pursuing instance consolidation, managing upgrades with on-premise ERP. This leaves little time for strategic planning on how ERP can support the pace of their business change and global growth. The dominant question is that how can ERP deliver more value and support the needed business agility in today's business environment? How do you do that? The answer is two-tier ERP, meaning that you can have your tier 1 ERP. Two-tier, I don't mean in a lesser in a value. The second tier is basically you're standardizing your subsidiaries, your global offices on a single instance ERP, for example, NetSuite. And you can have your SAP or Oracle instance that you have at headquarters. You leave that alone because you have invested millions of dollars in that instance. But as you grow, you cannot afford to replicate that infrastructure that you have at headquarters in the smaller offices. So what do? You look at the two-tier ERP. NetSuite's approach appeals to many of the large firms. Two-tier model lets you preserve your on-premise ERP investment in Oracle or the system while equipping global subsidiaries with more agile, flexible, cloud-based ERP financial systems and giving the headquarters a real-time visibility it needs to manage global business because the consolidation can happen at headquarters. Many of the large companies, such as Land O'Lakes, Qualcomm, Olympus, Magellan, CA, who's on our who's going to be speaking, their experience, how they moved their cloud, how they embrace cloud. So they're going to be talking about that. These companies already have embraced this approach. They are using on-premise and a cloud ERP with NetSuite to leverage the technology and manage their growth. Some of the benefits that are realized by our customers, for example, who have done this, that increased order fulfillment efficiency by 50%, reduction in development costs by 80% because they have more agility, they have more flexibility. They're not wasting time or investing money in infrastructure or spending time upgrading their on-premise solution. They're actually leveraging the innovation that the vendors like NetSuite are providing to grow their business. So that it's easy to see that employee productivity can increase by 20% because you have access from anywhere at any time. At this point, I'd like to invite Paul from Forrester to share some of the insights that they are seeing at Forrester.
Okay, thanks, Vishrut. And thanks to NetSuite for the opportunity to work on this webinar together. In my applications research at Forrester, I've been closely following the evolution of ERP applications as they transition to software as a service, or SaaS. In fact, I have a new report coming out shortly about how this market is playing out. And it's interesting to see how the momentum for ERP in the cloud is forming around a number of deployment scenarios, including two-tier ERP and a number of other models I'm going to discuss. Now, one thing I want to point out is that SaaS and cloud are often used interchangeably in the software market, but in fact, SaaS is a specific type or subset of cloud deployment. But cloud is a broader term that also includes a traditional style of single-tenant hosting, or taking essentially on-premise systems and and hosting them, which is really not SaaS. So, you know, the difference is that a SaaS system, a system that's really engineered for SaaS, has characteristics of software multi-tenancy, an automated updating model, and also configuration flexibility that are really essential elements of true SaaS deployment. So let me just give you a quick overview of the agenda for my portion of this webcast. First of all, I'm going to review some of the trends driving the market for enterprise applications, including SaaS. Second, I'm going to review a number of scenarios for deploying ERP systems and talk about how these deployment models are changing based on the opportunities opened up by SaaS. Finally, I'm going to leave you with a few recommendations about how to prepare to move forward with a strategy that works for you. Now, technology change is upon us today at a tremendous pace, and it's changing some of our long-held beliefs about how we get value out of our business applications. Looking forward into the near future, we need to think about different ways of deploying and using applications. The disruptive impact is about how we pay for these systems, how we set them up and manage them, and also how we use them. In terms of ownership costs, the market's adjusting to from a pay up front to a pay-as-you-go model, or even pay for metered use. In terms of flexibility, we're looking at applications that are now easier to set up, easier to manage, and also managed by the business rather than IT. This is a significant impact on the governance model where IT shifts more control to the business users. Another trend has to do with adopting better usability, including consumer paradigms and mobile and social in the application fabric. And finally, we need to think about the speed of applications in terms of how quickly can we deploy them, how often and how fast can we update them, and actually how fast do the applications perform in terms of managing large volumes of data. Now, I have a recent research report that we just updated on our Forrester site that talks about a number of leading trends in business applications technology. Now, I'm not going to go into all of these here today, but I want to mention a few just to highlight related to the theme of our webcast. And SaaS, first of all, is a key theme related to this webcast. Now, there are several complementary technologies that make SaaS systems work better. This includes a mobile client, and not just writing limited-purpose mobile applications for smartphones, but actually retooling the UI so that it works on any type of device. Another factor is business flexibility and also extensibility. These are two key trends that relate to how the software is designed. Configuration flexibility allows rapid adaptation of the software to embed business rules, business process requirements, and so on. And this should be non-technical so that business people can configure the software instead of relying heavily on IT with specific technical skills. The other aspect of this is extensibility. And by this, we mean we can extend or customize our applications in the cloud, which also involves using partners to add layers of functionality that the app's vendor cannot. And this drives further adoption of ERP in a cloud delivery model. Finally, I want to mention another trend called big data, which is a buzzword that equates to analyzing large volumes of data, but also delivering real-time analytics inside the application by storing all the data in memory. Now, this is a disruptive trend and a very powerful technology that's going to impact the way we use business intelligence going forward. Now, one of the things we do at Forrester is we use surveys to get insights into technology trends and spending priorities. In this annual software survey, we found that a lot of companies are still spending a lot of money in maintaining and rationalizing their on-premise applications, including big ERP systems. So they're still investing in converting older legacy systems, and as they do so, they're more likely to move to SaaS systems. Another big spending priority is upgrading software to newer releases. Now, this is really where on-premises deployments are breaking down. as I speak with dozens of clients about their application challenges, I find that more than half of the companies I talk to are using ERP applications that are at least 2 releases behind the current release. So it becomes imperative then to throw a bunch of money back into the system to get it up to date before the vendor raises the price or stops supporting a particular release. So this is a key pain point that SaaS systems address. Now, at the bottom of this chart, we see where companies are putting more and more emphasis and priority on innovation rather than renovation. And this includes investing in things like business intelligence tools, mobile capabilities, software as a service, and also social collaboration technologies. Year over year, the spending and interest in these innovation categories is increasing. There's also as part of this same survey data set, we asked some questions about spending on specific types of applications. You can see that the choices in green indicate a proactive stance in terms of investment in existing applications or replacing them. Now, what's interesting in these responses, particularly, is the part that's planning to implement in the next 12 months or in the following year. What we're seeing is that in ERP, about 8 to 10% of companies plan to implement new ERPs or finance systems, and we consider this to be, the churn rate of companies that are ripping and replacing older ERP systems. Now, you notice that for CRM and human capital management software, the tendency to rip and replace these systems is higher. And I think what's driving that is that CRM and human capital management are very heavily oriented towards a SaaS deployment model. So I think what's going to happen is that the churn rate of ERP systems and also finance systems, which is really a component of ERP, is going to increase to these levels as SaaS ERP picks up more momentum in the market. Now, on that particular point, we actually have compared our survey responses from last year to the prior year. And what we found is that there is increasing momentum on ERP and finance systems to move to the cloud. Now, of course, you're going to see a higher rate of movement on CRM and human capital management because those are very, very well-established systems as SaaS. In fact, most of the deals now for CRM and HR are almost exclusively SaaS. And we're seeing significant momentum pick up in finance and ERP as well. Another question we asked is, what's driving SaaS? These are customers that have made a decision to go to SaaS, and we asked them, what were the benefits that factored into your decision? Now, in the early days of SaaS, it was really more of a cost-based decision, but customers now have a more informed view about the benefits of SaaS. And we find that the benefits are really more about agility and speed rather than cost. So one of the reasons is that we find that SaaS systems are quicker to deploy. And we've validated this a number of different ways, and it's quite clear from the survey response in here where 72% said that speed of deployment was a key driver. Speed is also evident from the response about faster delivery of new features with SaaS. So in a true SaaS model, the software vendor will be entrusted with the job of keeping your application up to date, really relieving the customer's IT shop of the tedious job of patching and lengthy upgrade projects. Agility comes into play by allowing more flexibility in how the software is configured. Traditional ERP systems have been heavily customized, making them more difficult to manage. SaaS systems are configured primarily in the software metadata layer, which makes them generally easier to set up initially and then also easier to change on an ongoing basis with less technical involvement from the IT shop. Now, I want to move now to the second section, which is adapting your ERP strategy for growth and agility. So when you consider ERP systems, they address a broad footprint of functionality and industry contexts. So what we're showing here is the ERP footprint supporting really three major process areas: order to cash, which is your revenue stream; procure to pay, which is your expenditure stream; and also record to report, which is essentially your accounting system. Now, in addition, ERP systems have expanded to cover many other industry-specific processes and applications. So when you choose an ERP system, it's first of all important to decide what is the scope of the functionality that you want to address, and secondly, to find one that has the depth of functionality you're looking for in terms of what you plan to implement. Now, keep in mind that the functionality is not always just what the software vendor sells, but also it can be what the ecosystem supports in terms of partners, specialized partners that can make industry-specific extensions of these applications. Many ERP vendors rely on partners to add layers of capability in specific industry areas or even in horizontal areas like human resources and CRM. And now we studied a number of different ERP deployment models, and we found that there are several patterns in the way companies choose to deploy ERP systems. The traditional thinking on the left is a strategy to put in place one ERP system for the entire enterprise, covering as much functionality as possible, and using the multi-company capabilities to tailor it to individual business units. Now, this is ideal from a data integration standpoint, in that the accounting and operational data rolls up within the system. It's not always realistic, though. In fact, users of large ERP systems, like SAP and Oracle, have had difficulty in taking the enterprise-class capabilities of an ERP system into smaller business units. And it's also too expensive to deploy in many global enterprises, and these applications are notoriously hard to use. The two-tier ERP model is gaining popularity in a number of organizations that have a number of smaller units. You see that represented in the middle. Now here you put a different ERP system at the subsidiary level, and hopefully it's standardized at that level to enable better support and standardization of processes. A SaaS system is ideal for this kind of setup because it reduces the localized IT resources and minimizes the centralized IT investment. The third model shown here is a mixed ERP environment, and this is appropriate for a holding company type of environment where the corporate entity doesn't attempt to enforce standardization of systems due to its operating philosophy or the diversity of businesses it has in its portfolio. This model, however, is the most expensive to maintain since there are many different types of systems involved. Now, there's also discussion about a model called a hybrid ERP, and that I want to mention here that it's actually not mutually exclusive from the ones that I just discussed. So what's happening in what we mean by hybrid is that there's a set of loosely coupled components from different vendors as part of this application environment. And this is actually a rather typical environment that's sort of grown organically, but I think more lately is a strategy that's done by design. Now, so this really reflects the reality no matter what ERP deployment model you choose. ERP systems tend to lack a number of functional components or are substandard in certain areas that are better served by best-of-breed systems. For example, in HR systems, it's very common to have a recruiting system, learning management, talent management, payroll, and HR that are addressed with non-ERP components. It's also true for financial forecasting, planning and budgeting, financial reporting and consolidations, and so on, as well as projects and other industry-specific pieces. Now, integration technology has improved and makes this strategy more feasible to the extent that we can get these components to work together fairly well if the integration is well planned and if the timing of the data that's exchanged in the applications is appropriate to the business needs. Now, to drill down a little bit more on the two-tier ERP strategy, there are some benefits of deploying the second tier as a SaaS application. And now the key benefits of using SaaS at the subsidiary level are quicker time to deploy, ease of use, flexibility, and lower cost of ownership. The large-scale ERP system is still good in larger organizations to support the needs of corporate accounting as well as large-scale operations, but doesn't translate well down to the smaller business units. So standardizing the second tier enables consistent integration to the corporate entity so that the parent will have visibility into how these units are performing. If the integration is done well, the data can flow much more frequently than the traditional end-of-the-month closing process. Updates to the SaaS software at the second tier are managed by the vendor, relieving IT of much of the burden of software updating. It also means that they don't have to operate a lot of localized server installations. Now I want to wrap up here with a few recommendations and final thoughts. So I recently co-authored another report on continuous improvement for business applications, which discusses ways to keep your applications up to date and aligned with the business. In other words, making your business applications sustainable without becoming obsolete. This applies to all types of applications, whether they're on-premises packages, custom applications, or SaaS. Now, three key points I want to make around this continuous improvement strategy. First of all, you want to empower your business people to keep the applications configured properly to meet business needs. And this is a key benefit of systems that are more flexible, which is a characteristic we find in many of the SaaS systems. Secondly, you want to keep your systems up to date with patches and bug fixes, which is a tedious job that IT is responsible for. With SaaS, you let the vendor handle this for you. And finally, you need to plan and budget for software upgrades. Now, this is much harder to do with on-premises applications where a lot of upgrades are onerous to the point that a lot of firms elect to skip them, to actually skip releases. In SaaS, you don't skip releases. You take them, they're pushed to you by the vendor, but you can assimilate the upgrades more easily. So my final slide here is to wrap up with an approach to moving forward to improve your ERP agility. In the short term, what you should do is take inventory of your ERP environment and document what are your challenges and execution gaps. From this, you can define a vision and a roadmap to a more sustainable ERP landscape. In the longer term, you can execute on the roadmap by selecting the right ERP applications along one of these strategic models that I've talked about, implementing these applications and really adjusting them as the business grows and changes. Now, a key recommendation for SaaS ERP systems in particular is really not to overthink the initial implementation, but rather to design for flexibility and change. This is different from the traditional ERP approach of trying to get everything in place the first time, and these projects usually run over budget and late. So use the flexibility of SaaS to get the system in place quickly and then adjust it more often. So with that, I'll turn it over to Adam for a customer perspective.
Terrific. Thanks, Paul. Nice job, and thanks, Bashroot, for the opportunity to speak to everybody today. My name is Adam Famularo, and I'm the SVP and General Manager for CA Technologies. Today, I run our AppLogic business unit, but when I first became a NetSuite customer, it was when I was actually running our ArcServe and Irwin division, which I'll speak to next. For those of you who are not familiar with CA Technologies, we're the leading software company when it comes to enterprise management and security software. We're just under $5 billion in revenue. We have about 14,000 employees, and we continuously be on the list of one of the top innovative companies in our space. In relations to the conversation that Paul and Bashroot have taken you through, we have been using SAP since I think we started installing it back in 2005, 2006. So it's been quite a while. And as I mentioned, I took over the business when I was running our ArcServe and Irwin division, which was roughly a $200 million division, roughly 800 employees. That was focusing purely on building, developing, and selling storage and data modeling software. And what we realized that with the current system that we have today is that we weren't going to be able to expand in new markets, which was something that we were actively working on doing. And we really were looking for a new business model, a new way to take our products to market than we did today. And that was around new sales channels. So we primarily sold these softwares to SMB customers. And for the most part, we had a channel sales force that was sold through channel partners and distributors and some OEM manufacturers. But we never really had a strong e-commerce model to enable us to both go directly to the end user, but also enable our resellers to be able to sell through e-commerce to the end users as well. And that's what led us, on the path of NetSuite. So as I stated, some of the challenges were, we needed to launch, new mid-market products through an e-commerce platform, and keep in mind that we do have a channel partner-based business, and we need to keep that channel partners happy and satisfied with the decision. We did have a standard recurring billing model with an existing SAP platform, as well as we had a secondary platform as well for order fulfillment and distribution. So we had a dual system challenge there. And for us, what we did know and realized that SAP would never be able to provide us what we were looking for in the time that we were looking to bring this platform out. And we also did look at other e-commerce vendors, but none of them offered us the flexibility that we saw with the NetSuite solution. So what did our solution look like? It was a combination of us working with NetSuite to design, the front-end web store. Of course, everything was powered by Suite Commerce with NetSuite. The shipping was actually done through another, internal built system that we had within CA. And then all the revenue recognition was done through our SAP system. So you hear a lot of the two-tier model. We're almost even a three-tier model. But this was the best way for us to actually be able to sell and provide our products into the marketplace and not cause too much internal disruption. So for us, there was definitely a lot of learnings throughout the process. The first piece of going back is I would make sure that you map out a business process from beginning to end. We found a lot of holes that we had in our traditional processes that all weren't going to be solved by using NetSuite, but at least we recognized the challenges that were there, and we worked through those during the implementation. One of my guys came back to me with this great piece from Harvard, which was advice to staple yourself to an order. We literally walked through the whole entire customer experience, from them trialing our software to buying the software to getting the deliverables to installing the software to even doing returns of the software to make sure that the whole customer lifecycle experience was solved. And as I said, the NetSuite platform was our best vehicle to get that done. One of the big pieces for us was services. To be able to actually get this done, and I pushed the team to get this done, and we actually got it, the first version out and in production in less than 3 months, was the services engagement process. So one of my big pieces of advice going into it is engage services early and often, especially when you're working on a 2-tier and in our model almost a 3-tier integration model. And then the next step, which we're still spending time on today, it's kind of like the future, is always think about how you can actually integrate the whole entire e-commerce buying cycle directly into the product. So today, a customer can download a trial on our website, can go right from trialing the software to buying it, to then possibly the next version you could unlock new features right into the software straight through the e-commerce engine. So really integrating that e-commerce buying cycle directly into the software, that is kind of like the ultimate experience of where I would like to see us getting to. And with that, I will stop, hand it back over to Vishrut, and we'll open it up for questions.
Thank you, Adam and Paul, for a great presentation and the insight that you shared with our participants. at this time. If you have any questions, just a reminder, please send your question via Q&A chat window on the WebEx window, and we'll take them as I see them. Meanwhile, I do have a question coming in that, Adam, this is for you. If you can maybe summarize some of the benefits that you have realized by making this decision, having a SAP solution in place already, and then having a cloud with NetSuite, like if you can maybe articulate some of the benefits that you have realized.
Sure. Yeah, so for us right away, one of the quickest benefits was time to market, right? So we were looking to grow this business and grow it quite rapidly, and the only way that we could facilitate it is by creating a complete e-commerce-based system online. And for us to be able to do that with the traditional SAP that we had today would not have been possible. So for us, we were able to to go from literally evaluating to purchasing to implementing to actually booking orders, within a 3-month window, and been able to grow our business on top of this platform ever since. So, they have the right model, they have, the ability to actually roll this out in a quick fashion, and then on an ongoing basis, the support and assistance that we've needed as we've continued to scale.
Thank you, Adam. Paula, this question I think is probably best for you to take is that as you work with your clients, what are some of the concerns that you hear from your clients as they are looking to possibly embrace new technologies such as cloud, and especially when it's dealing with ERP and financials?
Okay, so this is again something we collect survey data on, and some of the classic concerns around deploying SaaS have to do with security, reliability, customization, and integration. But we find that the level of concern year over year is declining to the point where many companies now are quite comfortable with SaaS from a security standpoint, security and reliability, because these systems have proven themselves quite well over the last several years. In terms of customization, I think that's an important consideration when you're looking at ERP and financial systems, because companies do want to make certain adaptations or extensions to them. There are some products in the market, like NetSuite, for example, or Salesforce.com, that do come with extensibility environments. In other words, they, you and others, some others have a programming language that's embedded in the cloud platform. So that does add a level of extensibility for companies that need to add that that layer of customization on top of the system. In terms of integration, I think integration is a challenge with any system, regardless of the deployment model. And there are good tools available now, cloud-based integration tools, where you can move data between on-premises systems and cloud systems quite readily. So, as I said, I think these classic concerns are there, but the level of concern tends to be diminishing over time.
Thank you, Paul. As you mentioned, that as more and more vendors come along, or as more the trend is that the cloud is here to stay, some of the concerns that you articulated are kind of diminishing, or at least people are able to address them. Okay, Adam, this might be this is a good question for you. Is that being a SAP shop and using it for, like you mentioned, a long time, when you introduced this concept of going to cloud for a particular business, what were some of the objections that you had to overcome within your own organization moving to the cloud?
Yeah, that's a good one, Bashir. Actually, as you can imagine, our GIS department, our Global Information Systems, was not too thrilled at me when I said, "Hey, I want to install a new system." So yeah, they didn't welcome me with open hands. But when I took them through the business case, when I explained exactly what we were looking to get accomplished, how it will help our business, they then opened up and were willing to work with me. I will tell you that I did have to make some changes as we were going, where, for example, I had the pricing model, including the implementation work. I had lined up with one systems integrator to get that done. Our GIS department had a different systems integrator that they've been working with on the SAP system, and they would rather use that person or that company, but it would have cost more money. So, there was a little bit of, quid pro quos that we were doing on both sides to make sure that it worked for them and with them, and we really did it together as a team. I couldn't have gotten it done if it wasn't for our GIS department and their ability to work with us, to help, fit this business need.
Absolutely. So getting buy-in from appropriate groups and departments across the organization was a key in your...
Specifically the IT department that really, even though it is a cloud-based solution, there is work that they needed to do to make sure that it's integrated within the existing systems that we have today. And, for me to be able to do it, I had to do it on their terms. And that really made them more comfortable. Okay,
perfect. Thank you, Adam. Paul, one of the questions that probably suitable for you is that, it says that we have invested millions and millions of dollars in our existing solution. What recommendation do you offer, advice do you give us as we are looking to move to cloud?
In some of my research, and one particular piece of research, as part of a body of sort of advice type of research we provide on business applications, I laid out a strategy methodology, which means that you start with a capability assessment. You really have to look at the flexibility and functionality and cost of ownership of your current application portfolio to determine where you're having some problems. And you take this forward into developing a long-range vision for where you want to go with this, but also identifying a number of elements to that in terms of what applications do you currently have that are still serviceable, maybe as is, or maybe requiring some level of investment to get them up to where they need to be, as well as some gaps that are unserved, and also some areas where you want to rip and replace specific systems. And this all translates into an application architecture, an integration strategy, a systems governance strategy, and eventually a roadmap, that lays out, where you want to go and how you achieve certain objectives in terms of sustainability, cost of ownership, flexibility, and so on. And as part of that strategy, you want to consider leveraging some of the interesting disruptive technologies that are available, including mobile, social, big data, and of course SaaS. So I think it's a really good time for companies to be doing this kind of planning activity, strategic planning activity around their ERP platforms, and because nobody I talk with is 100% satisfied with the portfolio of applications that they have. There's always some room for improvement. And what I'm seeing also is a transition away from older on-premise systems to more agile SaaS-based systems.
Perfect. Thank you, Paul. So basically just look into the portfolio that you have and plan accordingly as to which applications that you want to move to SaaS first, and then go from there. Mm-hmm. All right, Adam, I think the question is for you, is that now that you have the cloud platform for your e-commerce business for this particular product lines that you described, what is next at CA? Are you looking to expand the cloud footprint?
Yeah, well, as you can imagine, we are actively becoming more and more a cloud company. And that's not only the products that we're buying and using internally, but we're also turning our software into cloud-based technologies. So, it's definitely a growing focus of us as an overall corporation. In regards to e-commerce and the e-commerce engine that we currently use today, as I mentioned earlier, in everything that I do, I try to integrate it directly into the products. To have a complete customer buying cycle within the software. That's definitely a big deal for me. And as I take on new divisions, right, so I'm not running the ArcServe and Irwin group anymore, but I'm in the new division now with AppLogic. We have looked to build out something similar, which is the next, e-commerce engine / app store for our customers to be able to buy software that runs on our cloud platform. So you'll see me using and expanding using, cloud-based services for many years.
All right. Thank you, Adam. At this point, we don't have any more questions coming in, so I'd like to go ahead and wrap up this webinar. First of all, thank you, Paul and Adam, for joining and giving us your time this morning or this afternoon from where you are. And thank you for joining this webinar. We look forward to speaking with you in future. And if you have any question or if you didn't answer any question that you may come up with later on, please feel free to reach out to us. Thanks again.
Thank you, guys.